The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is Thursday, the February the 14th. Happy Valentine's edition. And most importantly, we've kicked off here at TFNN just a beautiful 2 hours right in. Steve Rose comes on. I hope I can keep up that pace. 1 hour, 11 o'clock till noon. Then you get Larry Pesavento, noon till 1 o'clock. Then you get Daryl Martin. Then you get Dave White. Then you get Ken Shreve. Go right into Tom O'Brien, 4 o'clock till 6, wraps it up, gives you his thoughts on the markets, about all these different experiences, about, home builders. They're kicking. They're looking good. And he's got the Tiger Home Fund, the what is it, Home Building Fund. We've got a lot going on here at TFNN. I want to thank all those subscribers who came last night to my webinar. I have a 1 hour webinar, free webinar for both my subscribers, my regular subscribers, plus those who are doing the trial 2 weeks. And if you signed in for that trial, you've been very lucky, because although we are short the Dow, because that's just the way the ChapmanWave methodology works, we had no choice but to take a short position yesterday. And it is down about, it's down, maybe 20 cents on a $41 stock. We've got two positions that we just put on, one yesterday, and that is up. And then one we put on this morning at $9.06. It's trading now at $9.24, up 1.55%. So I hope that the subscriber, the trial subscribers, got a real kicker. And basically, you got a free trial and you got a free trade, at least two free trades. So we went through a number of things last night. I discussed how I use my methodology. I discussed how I use how I start to send charts out very early in the morning. Sometimes 6:15, 6:30, I start sending the Dow chart. That's this chart right here. This is the one that we're talking about, that stalk leg formation. This is the Dow chart. There's the leg. There's the body. There's a little bit of the neck, and we've pulled back. The DIA 120-minute chart gave a very good example of it, did exactly what we were looking at, went up above the 139.89 high, went to 140.20, 30-something. What was it yesterday? 140.36, and then pull back, just like the arrow says, and now it's trying to bounce. I made a big deal last night about, I had questions, didn't want to turn into a Tiger Technician's Hour. I wanted to explain that I send the charts out very early. All the charts that I'm looking at, whether they are charts that we have a position or not, they were charts that were really important, of the indexes, of stocks that we were looking at. I want to teach the methodology. Sometimes I just send out charts that are pure study charts, sometimes just before the weekend, like on a Friday. So you can spend the weekend studying the ChapmanWave methodology together with a CD introducing the ChapmanWave methodology, that CD book that I have here at TFNN. Then at 8:35, that's the last chart I sent. It's the Trader's Corner. And then I explained, if you don't have time for all of that stuff, it doesn't matter, because I give a quick summation, one paragraph right at the top. And then I go right through the different, like 16, 17, 18 different bullet points of what we have, what we're looking at. Now, it turns out, and I'm a little, I've been talking about this for a while. I do not want to be talking about being very bearish when the majority of my stocks are long. I don't want to be talking about being very bullish if the majority of the stocks are short. So the methodology said that we needed to have some kind of security by capsulating the ChapmanWave peak that possibly could be an F or a B in the daily chart, and the 120-minute chart going to a D by at least going short there. But it was also part of an insurance because we are long 6 positions, and I'm going to mention it right now because maybe in the next 2 minutes it won't be. All 6 positions are up. In fact, 2 are at 5 and 4 year recovery highs. One is just making a leg D in the weekly chart. Who would have even guessed that? So I do not want to fight. When I'm looking at possible longs or shorts, I just seem to be coming up with more long positions. I also seem to be, and I explained it last night, for some reason, there are low price stocks. These could be huge companies, but there are low price stocks that are actually acting very well. We went along a stock today that is probably the most denigrated, maligned stock in the Dow. Has been for years. Every time it comes out with earnings, people just laugh because they're always saying, oh, if only this and if only that, and blah, blah, blah. But the stock technically was acting beautifully. Now, I don't know if it's going to continue acting this well, but I had to grab that opportunity because we wanted just a tiny pullback, got it, and we got in. So all I'm saying is, for some reason, I made a big deal last night about the 3 bears, VIXI, Bondi, and Dolly. That's the volatility index. Until the volatility index, let me just go to the chart that I always feature every day. I've actually expanded it because I wanted subscribers to keep looking at the high of 23 in the volatility index, 23.23. And it's trading now. It failed again. It's down at 12.81. Until that it hasn't even in all this time gone to the 15.93 level to start to try to fill in that huge gap on the 2nd of January. When it does, you will get a sustained move to the downside in the market. It's not good enough that the dollar, which is Dolly, out of the three bears, that the Dolly is acting well. DXY went to leg C today, I believe. Yeah, leg C, nice move, but it hasn't gone above leg B, the former B that is still extant, I guess you can say, that 81.46 week of the 16th of November. It needs to clear that. And bonds, the TLT, at 116.16, just off the low? Come on. If the TLT, Lehman 20-year Treasury bond fund, cannot power into the 118.70s, then I think you're going to see this is the VIX is saying, I've still got buying pressure, not selling pressure. So I wanted to give you the overall. This is what we went through last night. I didn't want to make it. I had questions about stuff that I could answer. My Tiger Technicians hour. I only had an hour. I had to make it the most comprehensive hour. It's archived. And I don't want to speak out of turn, but I believe that if you sign up now for the 2-week free trial, you probably could get that archived. I shouldn't speak out of turn, but that's my guess. So here we are. Let's run the numbers. The Dow's down 7 after being down way more and up a little bit. It went plus. But the Dow is the weakest link because there were stocks that are very important. Remember, in my Dow Quartet, you've got GE. GE is acting beautifully at 23.25. We are along GE. You got IBM. IBM is acting just so-so. It's just acting, actually, I'm not going to say it's acting weak, but it's just really not showing power. It's got that U pattern, like a soft W in the monthly, which says tremendous resistance in the 208 to 211 area. Even if it can get there, it's probably going to be a reversal area. So IBM is not going to be a participant here if the market continues, if it suddenly turns around and wants to extend higher to try to retest the 14,190s former Dow high. Now, Triple M, oh, not MM, I'm going to make a note of that. MM acting very well. What's MM again? Millennial Media. So this is, sometimes you make a mistake. It's a good thing to do. I made a mistake recently, and it was a stock that we were following very closely. I missed a letter on one of the stocks that we're looking at. MMM. I love serendipity in this business. Can help you a lot. Now look at this. Triple M holding the 9-period moving average. I spoke about that last night. What a beautiful indicator this is. The 9-period exponential moving average. Look at that. It has not broken once. Underneath. Once it just touched it, but since it broke out on January the 2nd at 94.79, Triple M, 3M company, has held that line. Well, it's got an F/B, in just like the Dow, in the daily, little doji candle yesterday. There's a whole bunch of stuff I can talk about in terms of the doji. Had a question yesterday. What happens when the MACD pulls back? This is a great question. I said I'd answer it on the show. What happens when the MACD pulls back, but the stochastic is holding? I'm saying as long as the stochastic is holding really strongly, we can stay with that, because what can happen is that the MACD just needs some time to repair. Unless the beta between the fast-moving average, that's the green line in the MACD, this MACD right there, and the slow one, the red line, starts to expand to the downside. I would say avoid that stock because it's coming down. But as long as it's flat, it maintains the previous signal. And so far, the signal is still up. So, and not only that, it's at all-time highs. You know, people keep talking about the market, how terrible this economy is. I don't know what they're talking about. This is the most hated bull market I've ever come across in my 40-something years of looking at markets and actually being in markets, even when I was a teenager, back when my father and I used to do trading. I've never seen such a hated market. And nothing in the newspapers about IWM, the Russell 2000, being at all-time highs. IWM, all-time highs. Nothing about the IYC being at all-time highs. Nothing about anything real positive about what's going on here. So I think that while we could see a pullback, the longer term, especially if the Dow is only in leg C, and I do expect, this is going to be a consolidation phase. I believe we're involved right now in a consolidation phase. Some stocks are going to act well. The former real weaklings are going to act well. There are some stocks I can't talk about it as a high tech, in the internet-related business, like a LinkedIn. It's a little difficult for me to even mention the name. LinkedIn and Zillow. Look at Z. I mean, anything to do with real estate. I just came across a stock this morning. I just didn't even know about it. What was the symbol? What is the symbol? I'll find it in a minute. Give me 1 second. I ignored the stock. Look, Zillow went to a leg C. I believe it's a leg C in the daily, up at 44.35. Now, a lot of stocks lately, and I'm a little cautious about this, have spiked on the earnings news and then pulled back really sharply. I'm going to watch Zillow closely, but it is something very, very important. Now, here's the one thing I want to talk about. Tuesday, I thought this was old Ruby Tuesday. I guess it's not Ruby Tuesday anymore. I even ignored the stock. Closeout retailer of upscale furnishings, housewares, and gifts, all-time high. Amazing. Who knew about it? $9.54. I'll be back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. This is the Tiger Technicians Hour. I had a question during the break in email about Diamond Foods, Inc. And Diamond's Food Inc., you know, there was this terrible thing. I don't even remember what it was. It was just a winner. And then, pow! Back in November of 2011, it just started this huge decline. It went from 96.13. It was just I kept hearing about. In fact, I remember, I think it was one of Kramer's picks. He did fantastic on it. I don't know if he got out or anything, but I know that it was a real winner for him. And I kept watching it. They do have nuts and all that stuff. Diamond Foods. There was something that went on. I don't remember. 96.13 back in September of 2011. Then it plummets from a peak F top in the ChapmanWave in the monthly. 79 round number open. I love this. Man, if you can just, 79 round number. So 79 became the level to watch, round number open. And then it came down. So what does it do? It comes down to $13.12 in December. Now it's trying to rally. The question is, with Berkshire Hathaway having made an offer now for at least taking over Heinz, and look, this, folks, is Heinz right here. See it right there? See that little splash over there? Right there, you see that little splash? That is the ketchup splash. Actually, it should be red. It's green. Oh, this is the green. You remember that time they had green ketchup? Anyway, this is the little green. So yesterday it's trading ho-hum. It closes at $60.48. Heinz is at $72.52. Hey, That is very good. Leg E in the monthly, and it will soon disappear. So I didn't even bother redoing it. I've got it on the black chart, black background. I didn't bother on the white background charts to notate it. Why? Because it's going to disappear. Fantastic move. Anyway, great question. The question is, with Berkshire acquisition of Heinz today, I too am feeling a little hungry. When you have time, can you take a look at Diamond Foods and see where an entry is? The book value is $14.69 a share. On January 25th, BlackRock took a 7.85% share in the company. I still need to do the financials, and I'll report back with an intrinsic value price and full disclosure. I do not own shares of this yet, but I'm planning to buy. And this is one of our wonderful, we have fabulous callers here at TFNN. This is one of those. He had called about Crayback. I think it was early December, and it was trading at about 29. Look at it today, 45.70. This is not one of those people that you're just going to dismiss. This is a caller who has a businessman who has tremendous insight into the internals. So I'm going to take this very seriously. So let's go back to, we're looking at, of course, DRND. Of course, I've forgotten the name already. DMND. I always think of a demand, DMD, and it is trading at $16.02. So the monthly chart, let's ignore this. This is, the one thing that you got to look at is, where is the stock going? It doesn't matter where it's been. It's where can it go to? I love the action, the way it's walked the 9-period moving average in the 9-period moving average, but I was very disappointed. I actually looked at this recently because sometime I'm going to do a show. I don't even think I'll do it as a webinar. I will just do a show, and I'll talk about gaps. How some gaps, you would think that a stock that gaps down, that's it. But very often over the past 3 to 4 months, we've seen stocks gap down, fill the gap, and then continue higher. It's an amazing thing how they do that. So the big move was the move on the 11th of February. That was very important. So here we are, very strong move. I'm going to tell you what I would be looking at. I would nibble on, I like that. I would nibble on Diamond Foods right here at 16.05. I would nibble only for 2 reasons. Because there seems to be very strong support at 15.24. And at worst case, that candle of the 11th with a base of 14.36. I don't think that low is going to be tested right now. I think this is in the area of, it's the sexy area of food. It's always a sexy area. But, happy Valentine, everybody. Now, what we're looking at is the moment it passes 16.80, you can raise the base. So I'm going to say yes, our friend. This is a time to just nibble on it. The monthly is lousy. It has to cross and hold above. It really has to get to $18.80, $19. It's about another $3 above from here before I'd even be interested in the monthly. But the weekly is improving. So yes, nibble on it here and watch for the 15.23 to the 14.70 area. If it comes back there and holds nicely, that's where I'd add another position. I'll be right back with Pat in the Villages. That sounds lovely. Florida, straight after this break. Pat, hold on. I'll be right with you, and we'll be looking at a stock that I missed yesterday that did just great, but that's the way.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman. Dow's down 17. S&P is down 1. Comp Index is down 2. Gold is down 3. Silver's down 0.33. Remember, I just don't see gold. I know people are talking about basing here, but I actually don't see it because I don't yet see gold coming back as a currency of fear at this point. Looking out, I think we need that time to see those stores that have popped up that sell gold. I want to see foreign signs, and then I'll be really interested in going back into gold. Okay, Pat in the Villages, thanks for your patience. How are you?
Hi, good, Basil. Nice to talk to you. Can
Nice
you
to
take a
talk with
look
you.
at NSM on the daily, weekly, and monthly so I can check my count?
Oh, you're just trying to get me upset, right?
No.
I say that, folks, because yesterday I said that I wanted to buy, what did I say? We wanted to buy, this is Nation Star Mortgage Holdings for my opening call. Wanted to start small long under 38.50 using a 0.55 stop. See the chart, just sent to the site, and the chart showed that it was at B and it was starting leg C up. And what was the low yesterday? The low was 38.83. We missed entering, and that stock went from a close on the 12th, which was what, Monday, Tuesday, Wednesday, Thursday, Wednesday, on Tuesday at 38.58 to today's high of 41.21. Do you have this, or are you just doing is this of interest, or what's the story?
I'm going to compare it. I think I have the count on OCN, which I think the chart looks a little better, but I wanted to see what NSM looked like, and I was off on the daily, but I did get the weekly and the monthly. My other concern is, see that long wick on the monthly now? Is that going to go down? And still, I know how you say when you see
that's
those
the
long
Roman
wicks,
candle, right? The Roman candle.
Yeah.
Right.
Is that going to get filled right away, or do you think it's some time off on the monthly?
Are you looking at the charts now live?
Yeah.
Okay, great.
I'm looking at the monthly, the long wick on the
yes.
Right after
So let me do this.
wave.
Let me do this because we have the time, and it's a fantastic stock. I'm sure a lot of people are interested in this. Nation Star Mortgage Holdings is trading right now at 40.85, down a penny. It's got a whole bunch of technicals that I need to talk about. I just want to grab the daily for a second. I'm stretching this out here, and I'm going to expand it. So the daily started off right on that orange line, which is a 200% moving average, 200% exponential moving average, 200-day moving average, at 23.53 on the 15th of November. It goes to peak A, B, C, D, pulls back, starts a brand new A, B, C, goes to a doji D. I don't know how many times I've counted Ds in the last 3 weeks on stock patterns that I'm looking at. Folks, please, if you're interested in looking at chart patterns, just try to use the ChapmanWave in the most simplest form. Look at the lowest, most obvious low bar. See if you can count peak feet. 4 peaks to the top, which will be peak D. That's where other things can happen, but that's the goal. So it does it twice, then it pulls back really sharply from 40.61 with the MACD and the stochastic to give another buy signal on the doji low with a silent doji candle on the 25th. That's 33.79, and the 28th. And then what does it do? It goes peak A, B. Now it's broken out, and technically I should call this E/C. For now, I'm very comfortable calling it leg C because it's got so much power. It's so much higher than the 9-period exponential moving average, and it's within an up channel. It's testing the resistance in the up channel in the daily chart. So let's go to the weekly. I'll open this as much as I can because this is an IPO that only came out back in March of 2012. So it starts its initial buy mode from the round number 13. Let me just type that in. 13 right there. 13. Round number low. Make it green. Right there. Green. And that was the week of the 4th of May of 2012. Then it goes peak A, B, C, D. But the D went within 2 bars to a new recovery high. The MACD fast-moving average was very strong. It goes to E, and that E was that one that we were talking about at 37.20 back in the week of the 5th of October of 2012. And it comes down in this A, B, C. This is the lightning rod pattern down that you hear Larry talking about, Tom and Steve. This is very important in their work, A to B and then C to D, and it comes way down. It comes down to the 23.53 level on the 16th of November. Now in the weekly chart it goes peak A, B, C, and now the moment it took out just yesterday, took out the 40.61 high. It's in leg D up. The week is about to finish. So far, this is a beautiful candle. The MACD is good, but not as good as it was. The stochastic's at 77%. So there's a little heads up to say, hey, this could make maybe a little bit of a consolidation, make a leg D, and then it could have a digestive pattern coming up. And that digestive pattern says 3863 is the 9-period exponential moving average, and the up channel trend line is right at 3818. Depends when it happens because it's a rising line. Now we go to the candle that you were looking at. That pullback in the monthly from the $13 round number low. I love these round numbers. 13 round number low. It went soaring in leg A up. I just kept wanting to buy it, but it just kept moving so quickly. Sometimes you just got to hop on board a stock that has everything going for it. So 37.20 was the high in October. It pulls back, and now we get the candle that I call the Roman candle, ChapmanWave Roman candle. It's perfect. But the rule of the ChapmanWave Roman candle is if you break above, not you, if the price of the tradable that you're looking at breaks and closes decisively above the high of the Roman candle, that negates its immediate impact. You have to look for that as if it's just another downside target when eventually this starts to come back. At any point in the next 3 months, if NSM, which is trading at 41 right now, Nation Star Mortgage Holdings, I'll never remember the name, Nation Star Mortgage Holdings, if it ever gets into halfway through the wick, if it ever gets to 27.57, it'll retest the low. But right now, it's done the exact opposite. Not only that, there was a doji candle of December of last year. And the rule that I have with doji candles, I have a specific rule that has to do with between 2 and 3 bars. So far, it's acting very well within that rule. So that candle is something to keep in mind, but it's not now because it has, well, I shouldn't say that. We're waiting for the whole of February to close. If it closes above 36.60, that is really important. If it closes above halfway into the wick of last month, which is an inverted Roman candle, so anywhere above 38.41 in the month of February, that's going to be very important. But it's leg B in the monthly, and invariably in the ChapmanWave, even IPOs, the majority of IPOs, if they show strength and they're able to go to leg A and then surpass it strongly in leg B, you can look out further and say that there's a really good chance that they will go to C and D. So I hope I'm answering your question. Now, you looked at OCN, right?
Yeah, I was thinking OCN was a little stronger, and I was thinking, talking about the general markets, maybe if we were going into the peak where the weekly was already in D, maybe we'd get a little pullback and a better entry in a couple of these stocks.
Well,
they might come down with the general market a little bit.
Let me just double check. You see, my weekly is only in B.
Right.
In fact, we are in B. You see, 14. No. No. This is leg B.
NSM, it's in D. It's in D in NSM.
Oh, in NSM, yes. No, okay. Yeah. I thought you meant the market itself. You see, my Dow and my S&P are still only early in the weekly charts on the upside. But if you go to NSM, correct. But OCN, I want to bring up as well because thanks for bringing it to our attention. I think our listeners here at TFNN, these are the stocks that people really are interested in. Fantastic stocks like I can never say this is a tough one. Ocwen Financial Group. I could never even spell it. If you said to me, I own Ocwen Financial, I would have put an I in, not an E. Ocwen Financial Corp. When companies come up with these fancy names, I don't know what. Anyway, it's at 41. It's also at 41. Here's the question. Which one is the better one, Ocwen or Nation Star? And I have to say Nation Star is early in its up move. Ocwen is a little more mature. So as a mature company, it has much more, there's much more guidance I can give. Oh, thank you for bringing it to my attention. 41.50, 41.87. In the daily, it's making C, D. This is probably peak D in the daily of Ocwen, trading at 41.08, and the weekly is in leg D with a doji candle, and the MACD is strong at 80. The MACD is crossing positive. The stochastic is at 86% in the daily, 90% in the day, and 91% in the daily, 86% in the weekly. So it's still strong. I would not be surprised to see it consolidate a little bit. I think out of the two, if you're more aggressive, I'd be going with Nation Star.
Okay, thank you. Oh, and just as an aside, you were talking about Zillow. There's another ITO out where they list houses for sale. It's Trulia, TRLA. Right. You might make that.
Yeah, I don't know if I've done it on my white charts. No, I've got it on my black background charts. Trulia, TRLA, is trading at 31.62. This is leg A in Trulia. Wow. And it's A, B, C, leg C in Trulia weekly. So I think it's going to make a high-level consolidation. I don't think it's going to fill the gap at the low is 25.89, close at 29 round number. It's trading at 31.62. I suspect it's going to make a nominal new high at 32.13. It's going to break above that, and then I think it starts to make a rectangle formation. Wow, you brought some fabulous stocks to our attention. Thank you so much, Pat. Really appreciate that. Hope I was of help to you.
Oh, big help.
Thank you very much for calling. And that was Pat in the Villages, Florida. Hey, it sounds so pretty, the Villages, Florida. Whereabout is that? Oh, she's gone. All right. Well, thank you, Pat. So here we go, folks. Let me try to sum this up as clearly as I can. I believe that the rotational aspect of the market is continuing. I believe that there are some stocks. I'm looking at stocks. I'll give you a few here. These are way too extended. But, I spoke about Tuesday, TUES, Tuesday. What is it called? Tuesday something or other. Tuesday what? Tuesday morning. It's called Tuesday morning. Good name. Look at that. It's a spectacular stock. It is in the monthly. It's gone to a leg D. Not an all-time high. All-time, I don't know where. Did they change the name? Because Tuesday used to be Tuesday. I'm almost sure it was Tuesday, the restaurant chain. I think they're still in existence. Anyway, made a high of 36.73 back in December of 2004. This has been, I think they must have changed the name of this company. Anyway, Tuesday morning. So this is probably headed towards the 10.28 area. The 200 period exponential moving average might be a little whippy before it gets there. Larry, I thought it was Ruby Tuesday, but this is something else. This is a company that, Larry Passaventa just said Ruby Tuesday. That's what I was thinking. But this is called Tuesday Morning. Closeout retailer of upscale furnishing, housewares, and gifts. This goes very well with the scenario I'll be looking at the home builders starting to improve. So, we're looking at so many of the stocks. Resource stocks. Here's a stock, RSO. I wonder if I've done any work on this. RSO. Yeah, look at this. I haven't finished doing any work on this. But look, it's got volume. I believe this is, look, volume, 1 million. It's not shy on volume. And the weekly chart is looking very strong. It's above the 9-period moving average of 6.33. It's at 655. So this is a resource capital core. I think we're in a very interesting period. We're starting to see holding companies, and we're starting to see the low-price stocks, especially ones with volume that have a history. Look, this is not a newbie. This is a company that's been around. It was once trading at 18.87 back in 2007. So it's had a long time to repair. So I believe there's a rotation going on. Don't be afraid of this market. If you see something like, I think Panera Bread is looking vulnerable, certainly Whole Foods we spoke about. Look at this chart. I am so upset. I was so busy preparing for the webinar. I had written it down. I've got it all over here. Whole Foods earnings, Whole Foods short, Whole Foods, and I completely forgot about it. It did everything that I love to do. We wanted to short Whole Foods going into earnings if it rallied towards the highs of the day into the close. Why? That gives you a 4-5% risk on the upside if they give earnings. But if they break down, it's down 10% like right now. Well, you know what? That's the way it goes. I just forgot about it. I apologize. Mea culpa. I'll be right back. Basil Chapman, Tax Ignitions out. Dow's down 18. S&P's only down 1.25. Be back right after these messages.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you could be granted one wish when it comes to trading and investing, what would it be? Would you like to learn how to make consistent profits on a continuous basis? I'm Steve Rhodes with TFNN, and recently I discovered a trading pattern more powerful than anything I've ever experienced before. This pattern works on all instruments and all time frames, and on February 20th from 6:30 to 7:30 p.m., I'll teach you how to master this pattern and show you how if you began trading with $100,000 on September 14th, 2012, you could have created $35,000 in profits in 4 short months. This trading pattern will transform your life, and the live online webinar is available to subscribers of my Mastering Probability newsletter. And now is the perfect time to sign up. Plus, if you're not completely satisfied for any reason whatsoever, it comes with a 30-day money-back guarantee with absolutely nothing at risk. This is a decision you won't regret. 60 minutes that will change the way you trade forever. Sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, we're back. Basil Chapman right here, Tiger Technicians Hour. This is the last little segment for the week. Well, let me just run down what I'm looking at. First of all, Whole Foods made a peak F top at 96.93, just a tad above the 96.86 previous high. Right at the top in the day, and then it came out with its earnings. And I've been talking about Whole Foods as a potential hat trick top, meaning that it's due at peak F in the monthly chart, peak F in the weekly chart for a timeout, a well-deserved, it's a fantastic company, but a well-deserved timeout. And that timeout could take it to where, and I think I even discussed this, the candle, which is not quite a Roman candle, but with a long wick of July of last year, down to 79.55. That's the area. It could make a rectangle formation, or, and this is my suspicion, that in fact, on the way, there are still buyers. There's still people that couldn't get out in time. So I suspect we're going to have a great chance to short it somewhere on a retracement back to the upside at some point over the next, maybe a week or 2 or 3. And then it's going to make these scallops, these dreaded H's to the downside. And that is really important. You want to see lower highs and lower lows to confirm that Whole Foods is making a hat trick top, meaning a top of time and price. And there are other stocks that are doing that. Those are the ones we want to identify of having a spectacular move. I mean, Whole Foods has gone from, I think it's split actually. So from the doji low of $5.04, yeah, it has split. From November of 2008 to 99, I would say, what is it, 2,000% gain? I'd say that's a pretty good gain. So you got to watch it. So rotational market, there are stocks that have been clobbered that are starting to act really well. There are stocks to do with the auto industry, maybe not the auto stocks, or maybe the auto stocks, one or two, but that are involved in the auto industry that might make better buys in trying to select a particular company, auto company. That's what we're trying to get. One's just broken out from a channel. There are, if we're starting to see aluminum and steel and stocks like that start to improve, it says that, yeah, there could be an improvement in the economy. I'm going to be watching copper. I'm going to be watching a lot. Let's just make it real easy for now before we go to Larry. Oh, today's Friday? Friday? It's today? Oh, Nico Dahan. I thought it was Larry Perseverance. It's Nico Dahan. Nico Dahan and Paige. Friday? Yes. Hey. Good. We're looking forward to that. And a happy Valentine to everybody. watch this closely. If the Dow closes under 13,000, I'll tell you right now, 13,870, then the wick of, whoops, it's moving. The wick of the 7th of February down to the 13,852 area, that's going to be key. Any close in the next week below 13,820, and we have started a consolidation of time and price on the daily charts, not the weekly, but the daily. We'll go to the weekly, we'll step by step. Weekly has tremendous support in the Dow, 13,696, S&P, SPX.X, and Wave. Oh, today's Thursday. Of course, it's Larry Perseverance. Wow, what a week we've had. Larry Perseverance coming on. Should be a fabulous show. Commodities Hour. Oh, I'm really looking forward to that. And the S&P just held the 9-period moving average at 15.14, and it's bouncing. Folks, watch the volatility and watch the three bears, Fixie, Dolly, and Bondi. If the three of them move in unison sharply to the upside, we're coming back down. If they stay low, at least two of the three stay low, especially the volatility index, there'll be buying pressure. That's the way I'm keeping it. So I just beat the gong. It's Thursday today. Fabulous. Looking forward to Larry coming up. And thanks for being here, everybody. And I did answer a couple of questions in the den. I just typed it right into the den. I'll try to get to some of them a little bit more on tomorrow. Tomorrow, Friday. Technical Friday, we'll go a little more in detail into the ChapmanWave. Thanks for being here. Stay tuned to Larry Perseverance. Great shows coming up. I'll be back tomorrow.